Welcome to Momentum Monday. Today is February 9, 2025. Just a reminder that everything you see on this show is strictly for educational purposes and not an investment advice. We're looking at the chart of the Nasdaq 100, and I think it's a miracle that the QQQ and the S&P 500 are still holding so well and near all-time highs, considering the earnings reactions we saw this season in mega caps. I mean, the only one that really went up is Meta, and up, multiple days in a row. So probably due for some type of consolidation or a pullback. But anything else like Apple, big gapped up and they've sold off. Tesla, the same thing, slight gap up and then sold off way below its 50-day moving average now, and close near potential support at 360 on Friday, but with all the talks about tariffs and the removal of the $7,000 federal tax credit when you purchase a new electric vehicle, um, the stock has headline risk. Um, Google and Amazon reported last week. Both of them gapped down, missed estimates. And the big reason for that was that both of them said that they're going to spend almost $100 billion on building their AI edge. Here's Amazon as well, holding a little bit better than Google, definitely still above its rising 50-day. Nvidia, I got hit pretty hard a couple weeks ago, on the news about the DeepSeek, about the Chinese AI. Supposedly was they managed to create a competitive product with just $6 million. Just a few days later, it was clear that, they were lying, that they actually had access to 50,000 NVIDIA H100 chips, and the actual cost was more like 2 billion. So this will only accelerate the competition in the AI field. So we'll see how NVIDIA will report in like about 3 weeks. I'd say the stock is technically still in a huge range, between 150 and 100, and probably is likely to stay in this range for a considerable period of time. I will be surprised if it goes back above 150 and start trending higher again, just considering how much headline risk there is regarding China and regarding selling to China. But as you saw, the dips are getting bought in Nvidia, and now it's back up to potential resistance near 130. So let's see how it's gonna act in the coming weeks ahead of earnings. I think they're gonna beat earnings again. It's a different question how the market is going to react. So overall, the market reaction to mega cap earnings has been relatively bearish, meaning that most of them went down after those reports. So it's really interesting to see the indices still holding so well, even though we've seen an increasing number of distribution days in the past couple months or so. You can see the big red candles, here, and they're more than the blue candles really in the volume chart. The same in the S&P 500. So all those mega caps that I just mentioned, the so-called big tech, they account for about 50% of the Nasdaq 100, about 1/3 of the S&P 500. So when we see those stocks selling off, it's kind of hard for the indices to hold well, and them holding so well means that there's been rotation into other areas of the market. You know what? Let's take a look at the small caps. Small caps still struggling in a range in a huge range here between 230 and 210. And we need to see a decisive move above 230, 231 on high volume to really believe that this has any legs higher. And this will depend on the action in interest rates. Interest rates have been pulling back since the beginning of the year. So the destiny of small caps depends on rates. If rates continue to pull back, we might see that breakout in small caps in the index itself. But lately a lot of the hot action really in the market has been happening in smaller to mid cap stocks. Like for example, last week we saw 3D printing stocks all of a sudden popping up. I don't know how sustainable this is, but uh, they had a pretty decent pop, 2 3 days pop, um, and now they might pull back and set up again. We even saw some of the cannabis stocks, breaking out on huge volume, following through. So we're definitely seeing, other areas of the market warming up when the tech mega cap stocks are pulling back. And the issue is that when those stocks pull back, that signifies that institutions are actually selling. When Apple or Amazon or Google, when they pull back, that doesn't mean that, retail traders are selling. It means that institutions are selling. And this is why it's important to pay attention to how those types of stocks act, because they reveal what institutions are doing. And, if they're selling there, maybe they will continue in other parts of the market. This is what I'm a little bit not concerned, but prepared for more chop and more volatility in the next few weeks. Despite the fact that the S&P is near all-time highs, I don't think it's all rosy, and there's been a lot of distribution under the surface. But there's also been a lot of positive price actions in select pockets of the market. Like for example, Palantir, one of the big winners of last year. It's the top performing stock in the Nasdaq 100 and the S&P 500 year to date, up 50%. Beats earnings estimates again. You can see an acceleration in earnings growth, sales growth. Obviously, it's very, very richly valued, but this is how all high momentum stocks are. They all trade based on hype and expectations for future earnings. And typically earnings um, follow price. They come a few years later. When um, the stock, stops going up and just goes into a consolidation mode or a pullback mode, but earnings can continue to grow. Robinhood has been another big leader year to date. It's already had a pretty significant move since October. I mean, it has basically doubled since then. And they continue to expand. I mean, to expand their product offering, they've become a one-stop shop for all financial needs of millennials, of Gen Z, and probably um, the ones that come after those. And they're also expanding geographically. They just opened in UK, in Spain. So I do believe that this is um, one name with longer term growth potential. And I do believe that I mean, it's obviously very, very extended from its 200-day moving average. And if you don't own it, it's better to wait, or to pray for a correction so you can get a better entry point. But I do believe that that market cap at 50 billion, and when I compare it to Charles Schwab, which is currently at 150 billion, I think at some point they'll meet. I don't know how many years down the road. It could be 4, it could be 10. But I do believe that Robinhood is heading in that direction, and that will do become one of the biggest financial services companies in the world. So, and the price action in their stock is reflecting that, and they report earnings uh, this week. In the past few times they reported earnings, they actually disappointed and gapped down, but I'm sure that there are a lot of people that are hoping to see another gap down this time so they can, buy that dip. But yeah, I'm long term, I'm bullish. Short term, I think it's extended, and I would wait for a better entry point. Um, Sam Altman, other company, Oklo, he is doubled, more than doubled year to date, and it's very, very extended. I wouldn't chase it here, but um, energy has been one of the hot sectors year to date, and even CEG and in VST, they were hit pretty hard during when that DeepSeek news came out, but they're still holding near their all-time highs and making higher lows and potentially building new bases. Um, it's energy is a strong sector, so it remains one of the leading sector year to date. So something to keep in mind. And there've been some more speculative AI stocks that have done really well. Tempus AI, big volume breakout here on the news that Nancy Pelosi has call options in this one, but then also a follow through. Like, I mean, I'm not an expert. I personally don't understand how can any company has any edge in AI, considering that they all have access to similar information. But either way, this is one of the pure AI plays in the healthcare industries that momentum traders are trading, and the price actions is what matters in the short-term perspective. So this has been one of the top trading stocks really in the this year. Gold has been super strong, it has been hitting new all-time highs, and miners have been following, uh, acting year to date, acting much stronger than Bitcoin. Bitcoin is just stuck in the range, stuck in a range here, and probably need time, uh, several more months to build a new base. So I wouldn't be surprised it just continues to just uh, go up and down within that range, 50 to 60 for the Bitcoin Trust ETF, IBIT. HIMS, HIMS has been another top leader here to date. I mentioned it right here when it was in a range contraction mode near its all-time highs, and it's been just a straight move after that. Also, I think it's super extended, above its rising 20, rising 50-day moving average. And in this type of tape, when you chase stocks that are so extended, you end up being shaken out. So I wouldn't chase it, no matter what. NET, another top name, cybersecurity remains a top sector um, in the market, and another earnings beats, another breakout. And here's a weekly perspective. It's just approaching its previous all-time highs from 2021. Very strong trends, strong growth, and this one is kind of becoming like another code name, just like Palantir. And the dips in this one are probably gonna get bought, and also the streaming company Spotify, super strong. Netflix, super strong. Netflix tried to break out after range contraction here last week, but the overall weakness in the market on Friday is kept a lid on it. So something to keep an eye on. Like, I would love to see it, pull back towards its 20 or 50-day, tighten up a little bit more so we can get a better entry point for a swing. Robots have been also a top trading topic year to date, and it seems there are two big companies when it comes to robots. You have Tesla, which is currently pulling back for other reasons. Robots are not in play, regardless of how strongly Elon Musk is trying to change the narrative about the company. That Tesla is not just an EV company anymore. It's a power company, a robot company, but the market may not be ready for that change of narrative yet, and we might see a deeper correction in Tesla before and more earnings reports from Tesla before we see a change in sentiment regarding this. So we have two big ones, Tesla and iSurgical. So the two big robot companies. The smaller ones that I'm keeping an eye on, one of them is Surf, has been making, higher lows, and I mean it's not trading very cleanly. Like it's a bit chaotic, but overall there is an uptrend. So one of the names in the fields that is interesting to keep an eye on, and it's a small cap company. Believe it or not, China has also been strong year to date, and I know that the thinking is that there is a tariff war with China, and it will probably gets worse in the next 4 years, and this is why when you buy anything involved with China, there is a lot of headline risk. This is why I prefer to either trade it intraday or use call options where I know exactly what my risk is, which is usually the entire option premium that I purchase. Or if I decide to swing trade it, just use a very, very small position size, just because there is a constant gap risk. And you don't know when one day you wake up and China's down 5% or 10%, or up 5% or 10% based on some tariff headline. But in the 3x long China ETF, it's testing its volume weighted average price since that rally here in September. And actually, this is the third time it tests it. It tested it here, it got rejected in November, then it was tested in December, and it was rejected, and now it's testing it again. So the way I look things, that any Chinese company that is already trading and setting up above its volume weighted average price since that correction, it's actually a potential leader. And a couple companies that meet that criteria: Baba, extended here, wouldn't chase it. NTES is another one. It's potentially setting up here for a breakout near 106. But also smaller ones like GDS has been super strong, setting up near its all-time highs, like a data center play in China, and Casey, Chinese cloud computing company, has been actually the top performing stock really since the election, believe it or not, 3217. Very extended here, I wouldn't chase it for any new swings. So I think that's all I have for this week. And also, if you would like access to me personally and to my ideas, just consider checking out my private X stream. You can, see information about it on my website, ivanhoff.com. And let me know if you're interested. And that's it. See you next week.